This is ShadowQuant Market Brief, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, August 7, 2026, and this is the New York session. Now, let's get into it. The U.S. labor market delivered a sharp shock this Friday, with non-farm payrolls turning negative and sending the dollar into a tailspin. As investors digest the data, we are closing out the week with a market defined by extreme fear and a defensive rotation. Let's get to the numbers.
The S&P 500 closed at $768.56, down a fraction of a percent. The Nasdaq 100 was weaker, finishing at $714.65, down 0.37%. The Dow Jones Industrial Average took the hardest hit, dropping 0.85% to close at $538.19. The Russell 2000 Small Cap Index fell 0.51% to $298.25.
Grid has the market data. Now, Cypher, what did the corporate sector tell us as the bell rang?
The earnings theme this week has been defined by the neo-clouds, the crypto mining and high-performance computing plays. Core Scientific turned lower after Q4 results disappointed. CleanSpark missed Wall Street's revenue estimates, and Mara Holdings swung to a Q2 loss as Bitcoin's price slump masked higher output. These are the headline risks for the sector as we move into next week.
Cypher notes the mining sector weakness and the dividend calendar. Let's pivot to the macro data that moved the needle. Pulse, what does the economic calendar tell us?
The headline story is the non-farm payrolls report released today, Friday, August 7th. The data came in negative, contradicting expectations for growth. This is a significant deviation from the trend, especially given the unemployment rate is currently at 4.10%, and the previous month's payroll change was already weak at negative 23,000.
So we have negative payrolls, sticky inflation, and a flat yield curve. Spectre, is there any risk signal we need to flag?
The most notable risk signal is the disconnect between market pricing and sentiment. The crypto fear and greed index is at 14 out of 100, extreme fear. Yet, the VIX is sitting at 15.81, which is relatively low. This suggests that while retail and crypto participants are panicking, traditional equity volatility is not yet spiking.
A policy dilemma between softening labor and sticky inflation. Let's look ahead. Apex, what are we watching?
3 things to watch as we head into the weekend.
Apex has the look ahead. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.